Onion.com.
KCAA is your CNBC News affiliate. We're the station that gets down to business.
Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. I'm Jeff Barton. I'm your voice in the mortgage industry. 888-713-2929, our telephone number. Give us a call. Pick up the phone, ask a question, think of a question, write down the number, and ask it later. We will certainly get back to you in any form that you leave us a message. We also have an email, info@malibufunding.net. We're on YouTube. I have a blog, and certainly you can follow me at my Twitter handle, @Jeff6493. What's going on out there in the marketplace? What's happening post-disaster? How are you doing in your search for your house, for your mortgage? Is anybody aware that mortgage rates ticked down a quarter point in the last 5 days? That's right. You were at 5.125%. You can now get a 30-year fix today, right now, if you lock it in at 4.75%. That's over a quarter point. Savings over the course of a loan on a $200,000, $300,000, $400,000 loan is huge, tens and thousands of dollars. Now, many people don't watch it and don't watch the fluctuations in the bond market. The bond market is the centerpiece for why rates are what they are. The Fed can do whatever they want. The economy can do whatever it wants. But when the U.S. government sets up a 10-year Treasury note sale, pay attention, because that's the actual number that gets traded back and forth each and every day. And really what sets the mortgage rates is that 10-year note. Okay, so at 4.75%, the actual interest rate today on a 30-year fixed, what's that going to mean for you if you're trying to buy a house? It means that your purchasing power goes up. Your purchasing power goes up by a significant amount if you're looking for an extra $10,000 or $15,000 or $20,000 to be able to afford on a down payment. That's what it means, because you do not have to qualify now for that extra quarter point in interest rate. It's a debt-to-income ratio, and those ratios are figured out by your broker, your bank, you. I mean, these are not complex calculations, but you just have to add up everything you spend every month and divide it into how much you make, and that's your debt-to-income ratio. So that's very good news for this week at the end of the year. We're in mid-December right now, and the holiday season is upon us. This is when everyone kind of falls asleep. They want to gather the family around. They want to have a good holiday season. They're not really interested or concerned with what's going on in the mortgage market or in the real estate market, for that matter. There are a number of trends going on in the real estate and the mortgage market which could bode well for you in the coming year. One of the things that I looked at when I was preparing for the show was the housing starts and housing sales. In the new home housing market, we're probably going to see about 675 to 700,000 sales in the new home market, and that's nationwide. That's not a good thing when we have to build 1 million a year. But if those particular numbers fall, and they fell 8% over the last month, year to year, which really means that the builders are nervous about the economy. I know people are saying the economy is booming, and it is. We have more people working today than have ever worked. Over 160 million people have jobs today. But this long-term outlook, what we look at in the new home building sector, which is really a precursor to what's going to happen in the economy overall. We look at new home permits, we look at land acquisition, and we certainly look at sales numbers. All three of these numbers are indicators of what large builders, Poltley, Aspen, what's his name, Eli, what's his name? Broad, right, the Broad housing sector. All these large real estate companies, builders, they're the ones that are really looking at the future, looking at acquisition costs and also building costs, as well as, you know, is the demand going to be out there? Let's say we have a mild recession in 2020, which a lot have predicted. Actually, there have been predictions over the last 2 or 3 years that we would be in a recession now. And last week's show, we talked a little bit about what that inverse curve is in terms of the 10-year and the 3-year, i.e., the longer term the bond, you should be getting paid more. The shorter term, you should be getting paid less. Well, that inverted last week, and there is indications when that happens that recessions are somewhat imminent. Well, this is another indication of the same thing coming from the housing market saying, hey, look, we're not looking at the same numbers next year that we're going to have this year, and it's indicated in this month in terms of the amount of new housing starts. So new houses, but what does that mean if you're out there right now in San Bernardino and Riverside? I want to say hi to KCAA, KMET, and our great friends up at K Tahoe. How's it going up there in K Tahoe land?
Things are really good, you know.
Excellent.
I mean, snow on the ground, and
Perfect.
Snow is winter gold.
Winter gold, absolutely. So, again, if you're in our listening area, thank you very much for tuning in each and every week. This is a show that we basically talk a lot of different things in the housing and in the mortgage sector. This is the Mortgage Voice, after all. And what we're trying to do is educate and help. If I can't do it, I'll find you somebody who can. We did get a call today from somebody up in the Tahoe area looking for a mortgage, and they also had another property in a different state. The company I work for, Malibu Funding, Inc., and their NMLS number is 79620. They have licenses in 10 different states. So one of these states that was needed, Illinois, the company Malibu Funding had a license there, has a license there, so we're able to help those people out. So let's just get back a little bit to the new housing starts that have gone down, the interest rates, which have gone down, and as a result of interest rates hitting 4.75% again, which they really haven't been, I would say, probably 4 or 5 months, obviously the mortgage application rate went up, and that's a good thing, because what we need in the mortgage industry is more loans. You may have seen or read or have read about or are looking at the number of lenders laying people off, and the number of lenders being acquired or merging, or the number of mortgage brokers may be less than what they were. Now, the mortgage business thrives really when the interest rates go lower. Why? Because then there's a strong refinance market. The strong refinance market means that you're probably going to get a better balance of purchase loans and refinance loans. Currently, the balance is not there. We probably have 20, 25% refinance and 75% mortgage loans, purchase loans rather. That's not a good mix, because what happens is purchase loans means that there's more people in the transaction. You've got realtors, you've got title people, you've got escrow people, you've got sellers agents, buyers agents, sellers and buyers, and all of that means that there's a heck of a lot of pressure on that timeline in the contract, and a lot more people who are trying to eat out of that one deal. It puts pressure on the system, and it's a longer process. Now, for those real estate agents listening and for those buyers and sellers out there knowing that that is the case, it doesn't necessarily mean you can't get your loan or it won't happen. It just, what I'm saying is a refinance is easier because it's just you, the broker or the lender or the bank, and the borrower, and that's it. And so the timeline, the constraints are a lot less. The borrower already has their refi in the process, and borrowers, knowing that the process itself is going to maybe take a little longer, they just back off a little bit. They're waiting for it to happen. A lot of cash-out refis in that arena. People are waiting for their money, so they're a little bit more patient than they would be under a contract with a seller and a buyer. And by the way, those contracts they're not ironclad, but they're pretty strong, and they're pretty intense in terms of the pressure brought on the deal. A lot of people are unhappy at the end of every deal anyway, so if the loan's held up, yeah, it can be a problem. So we're looking for a more, I guess, balanced refi to purchase market, and in this current climate where the rate just dropped to 4.75%, yeah, I think we're going to see some of that, some more of that. I think we might see this through January, and if we have our fingers crossed, will the Fed raise their short-term interest rate that affects your credit card? Of course, nobody wants their credit card rate to go up around the holidays because you're using your credit card to pay for most of the things that you need. Now, in my own particular area, a lot of people lost their houses. It's been terrible. But one of the things I want to talk to one of our guests today, Lori Wheatman-Zook, she is a radio personality for Fraudsters Radio. I want to ask her about the fraud that it takes place during the holiday season in general, but also the scams that are out there about trying to help people who have lost their home or help people who are victims in some sort of disaster, what to look for, what to look out for, and I'll be looking forward to her on the show. Anyway, I'm Jeff Barton. I'm your voice in the mortgage business, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton. I'm your voice in the mortgage industry. 888-713-2929 is our telephone number. Pick up the phone, give us a call. We answer any and all questions about your mortgage or some of your real estate concerns. It is that time of year where a lot of people just shut it down, especially in the industry. But there are some terrific deals out there, both in the real estate side and in the mortgage section. In the earlier segment, I talked about rates lowering to 4.75%. On average, 30-year fixed. That's a big savings, quarter point to 3.75% on a 30-year fixed to save you tens and thousands of dollars over that term of that loan. Plus, it'll give you some more money if you want a bigger down payment. And so if you're out there and you're thinking about doing something around the holidays, like I say, yes, you'll find that one or two agents out there who will help you because they have to, satisfy their particular needs in making a living. I know a lot of people do shut it down, but there are some great people out there who will help you. One of these guys I've just met recently, and I'm really impressed by both his, the way he does business and how he is attacking it this early in the year or this late in the year, is Nick Rogers for Berkshire Hathaway. Nick, how are you?
I'm doing great. Thank you for having me on.
Thank you very much for coming on. Okay, let's get right to it. What area of California are you currently working, and tell us a little something about your background.
Well, let's see. I'm years old. I live in Ventura, California, and I pretty much handle Ventura area, Ventura, Oxnard, Camarillo. I mean, I will go as far out as, Thousand Oaks, Westlake, Agora, up to Santa Barbara,
Okay.
If I can get work out there.
Okay, so you're a younger agent, which we don't, in my business, we get a lot of old guys on the phone talking to interviews. But to talk to someone younger, your approach towards the business, how do you make yourself, I guess, more attractive than somebody else who would be going after the same client?
That's hard to say. I mean, honestly, I give it my best. I love talking to people. I mean, outside of, real estate, I was also a waiter and bartender. So, I like talking to people. I like picking their brain, and I feel like I'm just an all-around easy person to talk to. I mean, I don't like bragging about myself, but I can talk to people, and that helped me out tremendously in getting clients and stuff.
Right. In the real estate business, you're right. Talking, being able to listen, I think those are the two things that are probably the most important because, as you know, and you've done transactions, and I think you just completed a couple, which were one you had to sell, and then you had to go out and find two houses to buy. Being able to listen to people is probably a great asset, right?
I feel like that is almost, it almost beats years of experience, as long as you can listen to what your clients want and, be able to help them and meet their needs.
Well, what is it that you hear when you're listening to your clients? What are they telling you? I mean, do they actually say, hey, I want this, this, and this? Or is it something of a skill by which you ferret out what they're looking for or what they want?
Let's see. It's a little both. Like I have one recent client that's looking to, he needs to sell his place, and he wants to buy something, a little bit nicer. However, he bought this place that he's living at currently as a rental.
Right.
And so he wants to actually live in it for a certain amount of time before he can actually sell it to be able to
go buy the other house. Yeah.
Sorry?
Go buy the other house. He wants to live in it for a while. Okay.
He wants to live in it, so, I mean, I'm just kind of keeping up with him, just kind of talking to him. If I find something cool, I send it his way, and, we chit-chat about that, but it's more of like a nurturing thing. It's not like I'm like, hey, buy this now, and if not, then I'm done with you. It's like, no, I don't see this as like a 3-week plan. I see this guy as maybe a year down the road, he might be a client of mine.
Well, that's really interesting. Most agents don't want to talk to anybody unless they're willing to buy right now. So working with clients who have long-term goals, that's one of your strengths.
Exactly, and I see it just as like kind of a nurturing kind of thing, because very rarely do I ever find someone who's like, hey, I'm ready to buy right now.
Right. No, I know. I mean, right now in the market, do you see that? Well, let's talk about the market in general in the areas that you're working in. What do you see out there in terms of the pricing and where prices are going? Do you see more properties on the market now than you did maybe 2-3 months ago?
I'm seeing, well, right now because it's the holidays, I'm not seeing them as much. However, there's still listings being taken, still houses being sold. But I've noticed properties staying on a little bit longer than usual.
Do you attribute that to the market conditions or just the time of year or both?
I think a little bit of column A, a little bit of column B.
Right.
I do notice, like, there's a little bit more, like, buyers are kind of questioning the price, or I wouldn't even necessarily say questioning the price, but, they might say something in the inspections and they're not completely happy with it, and they pull out of the deal early. Actually, a colleague of mine, she just had one of her escrows fall apart because of that.
Was the seller not willing to participate in the fix, or was it just something that the buyer said, forget it?
It was something that the seller wasn't willing to participate in the fix.
Uh-huh.
It was a nice house that had a lot of potential. However, it needed a lot of work.
Right.
And so it would need something with the garage, I think, needed like a complete overhaul and possibly need to be rebuilt from the ground up.
Now, do you see, when these kind of things happen in a deal, and anybody out there who's listening knows that a real estate deal can fall apart, in a moment, especially if you have more of an equal number of buyers and sellers, i.e. that it's equal in terms of the, it's not a seller's market, it's not a buyer's market, it's kind of an equal market. Do you think the sellers have caught up to the fact that that's the way the current market is?
I think there are some that's like, with my last listing, we got pretty much a grocery list of stuff in the request for repairs.
Right.
And it was one of those where it was like, my sellers are a little bit mad at hey, they're asking for everything and the kitchen sink.
Right.
And it was one of those situations where it was like, look, this is tough. They are asking for a lot of stuff to be done. However, you need to move on to your house. We've already located your house. And so it's like, well, we could tell them no and, back out of this deal, but we're back at square one.
Right.
Versus, we can put this money aside to repair the house. You'll still have plenty of money to move on to the houses that we've already located, get those in escrow as well. Or they were already in escrow, but at least proceed with our escrow.
Uh-huh.
And so it's one of those where you have to almost kind of like think for like the greater good of the situation.
Right. Right.
If that makes sense?
No, it makes perfect sense. I think the way I look at it is that most deals, everybody ends up not happy. And that's really probably what you're shooting for. You don't want to have one side feel great and the other side feel terrible, because that's not a win-win for both sides. Most of the time, the seller will give up a little, the buyer will give up a little, and, they both are, like you say, looking at the bigger picture. The seller needs to move on. And I think that's a great example of how you might differentiate yourself from some others in the market who will be less apt to, advise their clients to maybe you should do a little repair so you can move on to your house. You've already picked it out. You want to move in. I think that's...
We already have an offer written on it that's contingent upon the sale of their house. Yeah, exactly.
Right. So, I think that's a great strategy and a great way and an example of how, like I say, you may be different than other agents in the market.
Well, thank you.
Yeah, no problem. Okay, so where do you see the market heading in January, February, and March, first quarter of 19?
That's tough to tell because I don't have a crystal ball. I wish I did.
Yeah, me too.
I do see inventory moving up as it tends to slow down usually through the holidays. So I picture more houses coming on the market, more people buying, more people selling. However, with the interest rates and everything, I don't know exactly where it's going to be.
Right.
I've heard, that the interest rates are going down. I've heard the interest rates are going up.
Right.
So I honestly don't know.
Okay. Hey, could you shout out your phone number? This is Nick Rogers. He works for Berkshire Hathaway out in Ventura County. Nick, shout out your phone number for people who are listening on the radio.
My phone number is 805-689-8784, and I would love to help you out through anything that you wish to do in Ventura County.
Okay. Thank you very much, Nick, for coming on the show. I really appreciate
it. Jeff. It's been a pleasure.
Great. And I'm Jeff Barton. I'm your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton. I'm your voice in the mortgage industry. 888-713-2929. That's the telephone number. Pick up the phone and give us a call. We talk all things mortgages and all things real estate. We try to bring to the show a lot of different people in the industry, as well as people that can help you at whatever time of year it is. I know that we've been talking disaster and what happens to your mortgage, what happens to your real estate deal, and basically how you psychologically and emotionally get through really tough times, whether it's a fire, a flood, whether it's, as we had up here in the Ventura County, that shooting which took place and took the lives of 12 people. I mean, there's all kinds of things happening in our world today that seems to rock the boat. So if you're affected by any of these things and you're in, a real estate deal or you've got a loan going on, we can help you. We have past shows on our YouTube account. If you go to YouTube, look up Jeff Barton, the Real Estate Voice, and you can see this or past 2 or 3 weeks of shows that can kind of give you a guidance and a help a little bit as to what's going on. Today is no exception. We bring to the show first-time guest and somebody I actually admire for what she's done in promoting small radio shows like ours on her particular Facebook account is Lori Wheatman-Zook. I think I got that right, Lori?
You did, Jeff.
Okay,
Thank you.
Very good. And she has her own show, Fraudsters Radio, and I wanted to bring her on to talk a little bit about that, what she's doing, and thank her for actually putting together that group, which seems to be growing, Lori, every day.
It does. In about 9 weeks, we're up to 100 radio hosts and podcast hosts, and you were one of the first people that joined, so I want to thank you for that because we're all helping each other, and That's what it's all about for us.
Yeah, I do, and I think people who are fledgling into this career or have been in it a long time who do have a show need a lot of support, as anybody in any small business does. Speaking of small business, you're in Fraudsters Radio. Give us a little example of some of the things people should watch out for now around the holiday season that they might not be aware of.
Well, sure. Let me just say with Fraudsters Radio, I do co-host that with litigation consultant Storm Bradford, and we're dedicated to exposing different types of scams and frauds. So to give you an idea, we've had the IRS, the FBI, detectives, experts, helping people out in different scenarios.
Right.
But you wanted to talk a little bit today about fraud around the holidays, correct?
Yes, if that's possible, just because I think a lot of people, they're just not aware, or they're not made to be aware enough.
Right, and I've got a whole big list for you because fraud is my topic. So I'm going to start with the first one for me. I usually tell people, don't use a debit card.
Mm-hmm.
People use debit cards, and I think that is the most dangerous thing to use because if somebody gets a hold of it, they can just wipe out your cash. So if you have a credit card, there's definitely much more protection in using a credit card. I use mine for merchant protection. But in order not to affect your FICO scores, of course, you do want to pay it off and not go overboard.
Of course.
I think that's an important one. And a lot of people don't know that you can actually sign up, online with your credit card company for notifications, and you can also do that with your bank. So, for example, if I make a purchase and it was done online, for example, my credit card company will actually send me an online notification, which I look at to make sure that it's legitimate.
Right.
Your bank can give you notifications too. So if you know if any money is missing, and Jeff, if it's okay, I want to share kind of a little story of something that happened to me with PayPal last week.
Please, no, we were talking about it off air. I got intrigued and wanted you to share the story with us on air.
Right. Well, I have more than one PayPal account, and so I have one that is a newer account. and I had a question about a transaction. So on my phone, I Googled PayPal, and the first number that comes up under their PayPal logo, I hit call, and it was early in the morning, and so I wasn't quite thinking, right that early, and a person answered the phone. Now, a clue for people is if a person answers at PayPal, it's not PayPal,
right?
Because they have, they have their automated message. But this person said yes, they were PayPal, and I said I had a problem with one of my accounts, and I wanted to find out what I could do. And the person asked me for my password, and I said, wait, PayPal doesn't ask for the password.
Right.
I'd only given him my email address. Regardless, he read me off the name of the person and the dollar amount of that transaction. Now I'm thinking, oh, that's really, really weird.
Yep.
And so I say to him, look, I just got a notification online from PayPal saying someone changed my passwords. I said, I got to go and change my passwords. And he's telling me, no, don't. I'll call you back. He gives me a number from an 833 area code. And I'm thinking something's wrong. I hang up. I immediately go in, and on all of my PayPal accounts, I immediately change the password.
Right.
Now, the kicker to the story is it took me over 2 hours to get a hold of someone on PayPal. They have an automated system where they put you in queue, and if you press 1, they'll dial you back 2 hours later. So the first time they did that, and I picked it up, I got disconnected. I had to do it again. And finally, I was able to get through to someone and explain what had happened. And I did turn in all of the phone numbers, but that was not a real company, even though it appeared to be online.
Sure.
Now, the funnier part, Jeff, of the story is I have a friend who does not know the story, lives on the West Coast, and called me up yesterday with the identical story, how she found the PayPal number under the listing online, and this person wanted her to wire money or go get a gift card or do something ridiculous.
Right.
And so you've got to watch out for the PayPal scams.
What do you do?
They want your money.
Do you call the FBI? Are you calling the police? I mean, what do you just watch out for it and move on? How do you deal with it?
Well, it depends on what happens to you. I mean, first off, if your money is first off, I would say if you have a PayPal account, don't hold the money in the PayPal account because they're not like a regular bank.
Right.
Transfer it immediately into your bank because they're typically FDIC insured. So if someone gets your money out of your bank, it may take a while, but you will get your money back. I have 3 bank accounts because I'm a victim of ID theft. So I figure I lessen my chances if I keep my money spread out rather than in one account, especially this time of year. If they pull all your money out, you're in trouble.
Now, if you're paying for gifts online, how do you make sure that the company you're paying, like this PayPal, is legitimate? What are your suggestions?
Well, that to me is also scary. First off, if it's online, it should have the HTTPS for security.
Right.
But there are lookalike web pages.
Yes, there are clones.
Yeah. And since you can't nowadays trust the phone numbers, the one source that I do trust phone numbers from is a website called Get Human, as in get a live human being, gethuman.com.
Okay.
And they have someone there that actually, they list most major companies, and when you type in the name of the company, somebody has figured out what prompts for you to hit to get through to a live human being at that company.
Oh, I like that.
So far, yeah, that one I have found to be trustworthy.
Okay.
But I'm nervous myself because if it's not a real website and you're calling the number on there, then you don't know until you get hit. So that's why you want to use your credit card and not your debit card.
Let me ask you another question about when you got into radio and you wanted to do this show to help people. What was the motivation beyond helping people? I mean, are you enjoying the process of investigating and finding out? Do you like busting people? Oh, you do. Okay.
Well, I think it's fascinating. It's a fascinating topic. I have been defrauded. I know plenty of people have been defrauded.
Me too.
And part of it that fascinates me is the criminal mind, the sociopaths that do this type of stuff. But how I originally got into it several years ago, I'm a credit consultant.
Okay.
I help people with bad credit. I'm not credit repair. I actually teach people how it actually works so they can try and resolve their issues. And out of that came consumer advocacy many years ago. And so people would start calling me for everything. How do I do this?
Right.
How do I do that? how do I buy a house? What's an appraisal? And so I had previously co-hosted a show with a real estate friend, and when he stopped, they asked me at the station, well, why don't you do that consumer advocacy show you're always talking about?
Right.
So I did that, and you know where it made my life easy was now if somebody calls me up and says, how do I do fill in the blank?
Right.
I go, wait, I did a radio show about that. Let me send you the podcast, which is all educational, and the experts' information is at the end. And that way I'm not spending hours, of my time trying to help people, which I like to do, but it took a lot of time. This way I have the podcast. So I've stayed in radio, primarily on consumer advocacy. I did do variety, and then back to fraudsters to consumer advocacy. It's my favorite topic.
Listen, we're up against the clock. Can you shout out a phone number in case somebody wants to talk to you or maybe has a story that they want you to, talk about on your show?
Oh, sure.
Great.
Yeah, you can reach me at 813-777-4908.
Thank you very much, Lori, for being on the show. I really appreciate it.
Thanks, Jeff, for having me.
Thank you.
Have a great holiday.
Hey, and you too. And that's Lori Wheatman-Zook from Fraudsters Radio. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. That's a telephone number. If you pick up the phone and give us a call, we can help you with your questions about purchases, certainly purchases, refinances. Maybe you want to get into an investment property. There are some opportunities. It's the end of the year. A lot of people go to sleep, take a vacation, or don't want to do any work. So those of us that are still working and those properties that are still on the market, and by the way, interest rates have come down, so your mortgage is going to be cheaper right now. There are opportunities in any market, of course, but right now in this market in December 2018, yes, there are some opportunities. We have brought to the show over the years and over the last couple of months a lot of different kinds of people, and I'm going to do that again right now. John Estrada has never been on the show before. He's a broker for Montana Realty and Home Loans, and I want to ask him some questions about where his market are, what he's doing, and what he thinks next year is going to bring. First off, John, how are you?
I'm doing great, Jeff. Thanks for the invite.
Thank you for coming on the show. I really appreciate it. Okay, for our audience, let them know where you do your work, where your office is, and how long, a little bit about yourself, how long you've been in the business and such.
Well, first of all, I work for Montana Realty and Home Loans. We're located in Granada Hills. I've been doing mortgages for the past 20 years.
Okay. And give me an example of some of the more difficult deals you've dealt with recently. I know that purchases is where all the market is right now. In purchase loans, sometimes we run into hiccups with either, the credit or income. What are your major problems that you see coming up now?
Well, one of the biggest issues is to be able to qualify our buyers since, number one, rates went up a few months ago.
Yep.
Number one, and then we also have a lot of folks that cannot actually show their income, whether they're self-employed or they just simply cannot show it on paper.
Okay, how do you solve that one?
Well, there's some aggressive programs out there. For instance, we have a program where they come in with 25% down payment. And it's a no-doc loan, which means that they don't really have to show their income. All they have to be able to show is some assets.
Okay.
And they also need to be able to support their income with a profit and loss statement from an actual accountant, as well as a letter from them.
Now, these are what they call non-QM loans, right?
That is correct, Jeff.
Okay, and for the audience and anybody who's been listening to the show, non-QM simply means that Fannie Mae, Freddie Mac are not buying these loans. They are full TRID loans, which means that the disclosures and the fees are disclosed as they would be in a conforming loan that is a QM loan. So these particular loans, what are the rates on them? What on these loans?
They're actually not too bad. For a 30-year fixed program, you're looking at about 5.875.
Okay. And the typical loan right now is about 4.875, right? 4.75 to 5.25 is really a 30-year fix, depending on your credit score?
Yes, a conventional loan right now is right around 5.25.
Okay. And so those rates aren't really too bad for somebody who is looking at a no income or no documentation loan, other than, you know, the ability to be able to show assets.
That is correct, Jeff.
Okay, so you've been in the business a long time. How is business? What's happening out there in the market?
Well, the business has slowed down a little bit. We are seeing a shift in the market from a seller's market to a buyer's market.
Right.
We are also seeing that the prices of the properties actually have decreased.
Right.
Most of the listings here in the San Fernando Valley, and I think in California in general, the listings are actually lowering their asking prices.
Right. I think that that's true. And I think that, well, we were talking to a previous guest who was in the process of a deal that fell apart because the seller didn't want to pay for what they used to not have to pay for when it was a seller's market, meaning that it was, you know, no contingencies and either take it or leave it. Well, now sellers have to be able to negotiate a little bit, and in this particular deal, they didn't want to pay for any of the repairs. Is that what you're seeing as well?
Yes, that's what we are seeing right now. Like I said, it is shifting. We're going to start seeing more of sellers helping out with closing costs.
Right. Right.
And definitely repairs.
Right, and I think that's true. And they call that seller concessions, right, especially on FHA deals?
Yes, that is correct.
And on an FHA deal, how much can a seller give a borrower or a buyer?
3%. That is the max.
So the 3%, you're going to see more of these deals in the coming years. Do you think that the real estate market itself will be assisted by that? I mean, i.e., if it's more of an equal buyer to seller market, do you think that's good for the market?
I think that it's definitely good. They're trying to help the economy in general, but it's great for buyers at the moment because they don't have to come in with much down payment or closing costs because the sellers will be able to assist.
Do you think that the increase in inventory in the market is going to continue?
I think so.
So in the San Fernando Valley, for instance, are you seeing an increase in properties on the market? I know a lot of people pull their properties off the market, and we obviously had that disastrous fire. So, you know, inventory has always been key to maintaining, you know, prices. If we have more inventory, prices will become, obviously, they won't go up as much. And so that's a desire. Do you think that's what we're seeing?
Yes, there's more properties available in the valley now, and you know, part of it is because the buyers, you know, because the rates went up, we're not able to qualify for much. So now that it's slowed down a little bit, and that we're going to start seeing sellers' concessions, that'll definitely help all of the buyers to be able to acquire their properties.
Now, when December comes around, which we're in right now, we get a lot of lethargy or a lot of, you know, apathy, a lot of agents and people in the business. How do you approach that with yourself, your agents, the people you work with?
Well, you know, it is Christmas time, so a lot of buyers sometimes want to put this off until next year.
Right.
But, you know, if we have buyers that we actually been working for the past couple of months, I mean, it's definitely not going to stop them. Most of them are actually already in escrow.
Right.
So at this point, we're trying to close everything this year and be able to get them into the property before the end of the year.
Major strength. What do you do that other agents possibly don't do?
Well, we actually we do a lot of
I see. So basically, your ability to work with referrals is probably something that you want to continue doing, right? Referrals are much easier than going out into the marketplace, advertising, and trying to figure out where to put a buyer if the buyer is real. I mean, that's the difficulty with buyers, right? Are they real buyers? Are they really wanting to buy, or are they just wasting your time?
No, they're actually real buyers, and sometimes the only reason why they don't want to, or I mean, they cannot pursue this is because they don't qualify. But by having more aggressive programs day by day or every month coming out in the market, then that's definitely helping our buyers.
Excellent. Hey, John, we're coming up against the clock here. Do you want to shout out your phone number for people who are looking for a terrific agent in the San Fernando Valley?
Absolutely, Jeff. My phone number direct is area code 818-231-4016.
Well, thank you very much. I really appreciate you coming on the show, and we'll have you back again to get an update on what's going on in the Valley.
Thanks so much, Jeff. Thanks for the opportunity.
Thank you very much. And this is John Estrada from Montana Realty and Home Loans. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, and I'm your voice for the mortgage industry. 888-713-2929. That's our telephone number. Pick up the phone. Give us a call. Write down the phone number. Call us later. Ask us questions. And you know what? Don't pull any punches. If you got something you want to say, just say it. If there's something on the show that bugged you, say it. If there's something that you need answers to, we need input. And why we need input is because the show's better when you reach out. We deal with all kinds of different problems in the industry, all kinds of different problems with people in the industry. It's a people business, and I don't care what anybody says. You can do your rocket mortgages. You can go online and be as digital as you want, and you can have your head buried in your phone for as long as you want. But when you're buying a house, you need to deal with people. You need to deal with the real estate agent. You need to deal with the seller or the buyer. You need to deal with the title, the escrow people. You need to deal with home inspectors. There's all kinds of people. I know people are messy. Yes, we're all complicated. We're all selfish, and we're all looking out for our own best interests. But in a sense, that's the way it works. And if you have an ability, or you find somebody with an ability to be able to interact with people more passionately for you, or more, I guess, informatively, or any way, any shape that you can get a better deal if you're trying to work one, yeah, use those people. It's a great business. It's a lot of fun, and I've said this on the air many times. Working in the business has been fun. It's mentally stimulating. The challenges may be the same for each and every borrower, i.e., what can they afford? How much can they afford to spend on a monthly income, of their monthly income for a mortgage, and how soon can they come up with a down payment? These are the age-old problems for borrowers. For sellers, it's about maximizing the amount of money you can make on your house, right? I mean, everybody says the same thing. My house is worth more because X, Y, and Z I did to it. But that's what every seller says. So how do you differentiate this? How do you differentiate yourself, your house, or your buying needs or your selling needs from the competition? That's where the fun of it is, when you can begin to enjoy the process of dealing with your agent, of dealing with the broker, of showing a house, of making it better. Yeah, these are the fun things. And by the way, I've said it 100 times if I've said it once. Millionaires are made through real estate. That's the number one thing that gets people to where they want to be financially, is real estate market. Now, what kind of market are we in? Are we in an ascending market? Are we in a descending market? Well, I've talked about the fraud that has happened in the industry through Fannie Mae and Freddie Mac over the past 6 to 8 months, a list of companies that were used as employers. So through this process, what I've learned is that the borrowers are out there, and they really want to get into the market. There are opportunities in every market. What it shows to me when I go through the scenarios of the people that are defrauded, lenders and brokers, is that there's equity in those properties. And all of these properties have money that is lying on the table. And so what I'm saying to you is, if you're in an ascending or a descending market, it depends on when you buy and where you buy and how long you hold on to the property. If you're into a situation where you think that the property you bought 2 years ago is probably maxed out and you're an investor and you want to sell, that's good. Sell the property. Take your profit off the table and wait. If you are in a ascending market that keeps going up, maybe you want to get into the market now and hold the property for a year, 2 years, 3 years, whatever you think it is, and then get out. This is I guess, the calculus that goes into any investor. Now, if you're looking for a home for yourself, for your family, and you're looking to stay there while you raise your kids, you're looking for location, right? Obviously, you want the best school systems. You want the nearest locale to public transportation or to get on the freeway. You want ease of shopping, you want to be next to a grocery store or within quick driving distance. And you want to have a safe neighborhood, so you want to check out the police statistics in your local area. All these issues, situations, things that drive you as a buyer or a borrower or a seller are fun, they're interesting, they're things that every one of us has to deal with, because let's face it, we all got to live somewhere. Oh, Daryl, I want to ask you a question on that.
Yes,
Did you
sir.
see, and this may be a spreading influence that LA County has, they are looking to change the rules of short-term Airbnbs.
I have read that, yes.
Okay, and they're looking to limit the amount of time, space, and ability for you to rent out your properties.
Plus, there's something tied in with the old initiative where they were putting a cap on how much you could raise the rent, right? So it's tied into that initiative from the 1970s, whatever it was.
Yeah, and so I have a problem with that. I mean, I think what happened with Airbnb or there's several of them for rent by owner or a number of other that you might be able to think of. If you have a room in your house, or you have a house that you want to rent rooms, or you want to just rent your house for a day, a week, a month, what difference does it make to the city or the neighborhood?
Shouldn't make any difference whatsoever, other than, you know, if people are coming in and going out all the time, maybe they don't care as much about what they leave behind or what they do while they're there. You know, it's like if somebody rents your house to make a movie, right?
Right, that's right.
There's a bunch of people that load in there, and there's traffic, and there's consequences. Sure. But if somebody's going to come on vacation, you would think that they're just in, they're out, they're quiet, you know, it wouldn't be too bad.
Well, my daughter, who has been in, she was in Amsterdam, or north of Amsterdam at a school. She spent a semester there, and she said in Europe, if you want to go to a distant city, and kids are trying, I mean, Europe is one of these places, as you well know, trains, driving, planes, kids are on the move.
Right, nobody needs a car there, really.
Nobody needs a car, and you are basically spending a lot of time away from where your base is, and she just goes to short-term rentals, rents a thing for a night, a weekend, and it's no problem.
Well, they had the whole youth hostel thing down
right.
cold in the beginning, right?
Right, and this augments that, and that's what my point is that if the LA model takes over, and in certain cities around the country where you have, I guess, richer people who don't want to have these transient people moving in and out, they've already set kind of ordinances. But doesn't that kill not only the American spirit of trying to do something, make some money, or whatever it is that you want to do, but also people need to live and rent and...
Yeah, I went to a B&B once many years ago, and it was, you know, people in their home where
right.
they would, you know, they rented a room up upstairs. You came down in the morning, and they lived in the house and
right.
they made breakfast. I was a little uncomfortable.
It's a little, you know? That's a little weird, but that's like a bed and breakfast.
Yeah, no, that was eerie.
Now that's a big Europe thing too,
because you don't want to get too noisy. You don't want to.
Right,
you're
like
sort of tiptoeing around.
Exactly. Well, that's true. I mean, I think all of these rental situations in Los Angeles, San Bernardino, Riverside counties, really they have to take a harder look rather than just look to, you know, somebody's complaint and the regulations to be. I know Las Vegas has banned it. You cannot do short-term rentals in the city of Las Vegas.
Well, look who owns the, you know, everything.
That's what I mean. The hotels are what they want you to do, but if you're short-term renting, you're not paying city tax, you're not, and that's the other thing. What were we talking about that? About taxes and what was going on with the water bill?
Yep.
Oh, man, unbelievable. I think anybody out there who is looking at, either their phone bill and wondering why certain taxes may be up. The reason is because nobody uses landlines anymore, right?
Well, plus they're going to try to tax text messaging next.
That's right. That's what we were
news.
talking about. So the text messages, which is the greatest form of communication I've run across since I've been alive.
It's great. And the other thing that came up recently is the governor here in California gave Edison the permission, if they are sued for starting the Thomas fire, that they can pass that cost back to the public.
Thank you, Jerry. On your way out the door. What a nice guy, huh?
Yeah,
Anybody
I'll
out
tell
there who gets a little supplemental tax on your particular energy or your utility bills,
Yeah.
you can thank our ex-governor for that, or the new governor. He seems to be among the same crowd that likes to tax and spend.
Oh, he's a smiler.
Yeah,
He knows how to smile.
He does indeed. Thank you very much for jumping in. And I'm Jeff Barton. I really appreciate you listening each and every week. We love doing the show. We love coming on. We're into our 5th year now. So anybody who's out there, thanks again for coming and listening to the show each and every week. I'm Jeff Barton. I'm your voice in the mortgage industry, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.